10-year note treasury yields trading in a narrow range today from about 297 up to 303 and a half, holding north of that 3% level for the second time this week, but only the fifth time since May 5th when they first made the big move north of 3%. A mediocre 10-year auction today. 33 billion tens were issued by the Treasury. Didn't see the demand that we saw last month. However, we did see marked revisions to the GDP Now number, which is released by the Atlanta Fed. It comes in at still holding below 1% growth expectations for second quarter. So a bit of a tug of war there. Not as quite the demand we need for supply, but weaker growth expectations still hovering, all with the backdrop of June FOMC, which is coming to you live next week, actually a week from today. Now, what does this all mean for volatility? We'll check out that CVol index over at cmegroup.com. You'll notice that volatility has been on a little bit of a roller coaster ride, a narrow range for volatility, much like we're seeing in yields. But as yields move higher, we are seeing volatility mark higher, and that's what we saw today. We saw volatility marking higher. Even though yields were only up slightly, we did see a modest nudge higher in volatility. Lastly, what do we have tomorrow? Well, tomorrow we get the claims number. That's our weekly look at the job market. Claims are expected to come in north of 200,000. That, again, is not what the Fed wants to see, but we've kind of seen that trend over the last several weeks. Secondly, we get the CPI number, which I think if you take a look at any pricing mechanism, you'll already know that prices are at decade level highs. That's something that the Federal Reserve is looking to fight in their as they raise rates, which started back in March of this year. We also get a 30-year auction, and there will be no Fed speakers. Fed's in their blackout period right now ahead of the June FOMC, so they're not going to be able to stir the pot, so to speak, tomorrow. So again, we have claims, we have CPI, and we have a 30-year auction tomorrow that will all affect the bond market. So 10-year note yield seeing a very narrow range, hovering at 3% ahead of tomorrow's key CPI and claims numbers. Let's not forget next week's June FOMC.